Welcome to Trading Nation. Let's take a look at the broader market. Why not? Sold off in a big way on Thursday following the president's announcement that he will likely impose tariffs on steel and aluminum next week. The Dow, S&P, and NASDAQ all falling over 1%, in some cases 2%. Dennis Davitt with Harvest Volatility Management, Boris Schlossberg, BK Asset Management. Boris, do you A, believe this was a tariff and trade-related sell-off, and B, is it an overreaction or maybe an underreaction?
No idea if it's an overreaction or underreaction right now. It's definitely a tariff-related sell-off, and it's across other markets. I see the dollar melting downward as well as the stocks. And generally, when you have any kind of tariff-related policy movement in the U.S. government, it's always bad for the U.S. dollar, which means that everything that we're going to import is going to be more expensive for us going forward. So I do think that if you're going to follow this policy, dollar weakens, it's going to create more inflation in the economy, whether we like it or not.
But should that merit a couple 100-point sell-off in the Dow, Boris?
Yeah, I think the Dow is concerned because that means costs are going to rise for the multinationals. It also means that we're in a very uncertain environment trade-wise, not just with China, but with maybe any of our other partners like Europe and other Asian partners. And markets generally hate uncertainty. They hate any kind of interventionist policies across all markets. Dollar markets hate that, and I think the equity markets hate that. So I think you're seeing very much investor boycott at this point.
Dennis, I want to broaden this out a bit because volatility is literally the name of your company, the name of your game, what you've been doing for a couple of decades. What's happened in the last couple of weeks? We've had tough talk from the president since he took office. But all of a sudden, the last couple of weeks, we've had 400 and 500 and 600-point moves in the Dow, something we didn't see for a record period of low volatility. What kind of gunpowder has been laid lately?
Well, I think you have to go back to the beginning of the year when you look at this. The one thing, the volatility market was cracked in January and February. And people forget about the up 7% move that we saw in the equity markets in January. In the volatility world that I've been in for about 100 years now, that up 7% move really sowed the brakes in a lot of the volatility trading firms out there. And then for it to reverse and sell back off, and then was the big explosion in the XIV, the double short ETFs. And I know we've talked about that as much as we've talked about Bitcoin, and we're tired of it. But the volatility-led calming of this market in the past is no longer there because a lot of those instruments have been removed. Boris had a very good point. The market does not like uncertainty, so the market will sell off on uncertainty. But the only thing I'm certain about is that the president made a statement. He also said he was going to be pulling out of TPP, and then he said he might be back in TPP. He said he was going to bust NAFTA. He hasn't busted NAFTA. I think everyone is getting way over their skis on this and overreacting to the downside. He'll mention that he might announce tariffs next week against China or against the world in steel and aluminum. I don't know why people are getting so carried away on this. If this is the reaction, there's going to be reaction from those firms. It's not just hurting the United States. It will hurt everyone. And as people who are on CNBC today mentioned, this has been going on for years. And maybe this is the first time it'll be dealt with in a rational manner. In the volatility space, which is what I do for my day job, we have seen an increase in volatility. The VIX has gone up, but we are not seeing the dislocation in volatility that we saw in the month of February.
Yeah, and going back to it, and by the way, good points, because nothing has been signed and maybe nothing will be signed here. It's just an announcement. Are the XIVs, which, by the way, I give a shout out to Boris and you, Dennis, and the Trading Nation team. Last year, we talked about the risk of that XIV. Is the XIV kind of out of the market, Dennis? Is the risk of that instrument and the short vol trade gone, or is it still lingering?
No, in my opinion, it's out. And what happened was it was out in a very unique time period, and it's not to get overly complex, but the VIX February futures expired the same day we got big inflation numbers out of the government. And I don't know if you recall, the market opened down about $15 or $20 in the S&P, and then the VIX opened lower, and that was the unwinding of the last of those XIV triple levered ETFs. And then the market proceeded to rally, I think, 300 or 400 points in the Dow that day and started the real recovery in the market. So the volatility market, where in the past I felt wholeheartedly led to the sell-off that we saw earlier in the year, is not what's leading this market lower. I do think people are giving it to this, talk of a trade war. But let's find out what's going on first. And one of the biggest problems is there's just not people in the markets anymore. It's all computers. So the computers see that, like, oh, trade war, according to this algorithm, we must sell stocks. So if you like stocks out there, to quote the Oracle Jim Cramer, this is a tremendous opportunity to go out and buy stocks that you think are good stocks. And in the volatility, I think this is a great opportunity to go out and sell puts on stocks that you want to own. There's a great opportunity right now.
Okay, sell puts, buy stocks, and all those doggone computers that are just scanning for specific words and kicking in that software program like War Games.
These kids.
Damn kids. Boris, Schlossberg, and Dennis Davitt. And by kids, we mean like, 50-year-old programmers. Guys, thank you very much.
Exactly.
A really good discussion on the volatility and the markets. Folks, as always, thank you for watching Trading Nation. I'm Brian Sullivan. We'll see you next time. Okay.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.